Okay. 5, 4, 3, 2. All right, 1. Let's do it. Hey everyone, welcome to another episode of Trading WTF. We're talking about where to focus, and I know sometimes we're always thinking, what the F is going on? So today we have two very special guests that are both extremely knowledgeable and have a lot to offer and share with us. One of the most complicated things about financial markets is there are so many products to trade. Besides various asset classes such as currencies, stocks, commodities, indices, and now cryptos, et cetera, there are different instruments such as CFDs, futures, options, forwards, spots, and more. Both of our guests have been trading the markets professionally for decades, and they both trade various markets and instruments. In this episode of Trading WTF, we look into the different products you can trade and how to approach a marketplace with an abundance of options. We have with us today Inna Rosputnia and Raghee Horner. Inna is a stocks and futures trader, blogger, and financial analyst, and has been trading for the last 12 years. She received the award Leading Innovator in Wealth Management and Most Outstanding Woman in Finance 2019. And when we talked about that, she said that she didn't even know she was getting it. Her clients put her up for the award. That's pretty cool. Inna is the founder of ManagedAccountsIR.com and has an NFA license Series 3. She is currently in the process of incorporating a hedge fund, and Inna has been featured on Fox, NBC, CBS, and ABC, and contributes to the Wall Street Journal, Investing.com, Benzinga, and more. Raghee is the expert futures and Forex analyst and trader for Simpler Futures and SimpleTrading.com. I've actually seen some websites where she's like one of the top ranked analysts inside the industry as well, on Twitter and such as. She's been trading for more than 30 years and has a great way of breaking down the noise of the markets into actionable, consistent, and profitable trading strategies. Raghee trades futures, spot currencies, options, and equities across any time frame. She believes traders should know how to trade various asset classes. She looks at the markets as a whole and then decides which way to approach a trade. This philosophy has allowed Raghee to become successful in various markets. You can follow Raghee navigating the markets in her daily live members chat room, where she conducts analysis and real-time trades, or on her YouTube channel with her series Charts and Coffee. Raghee is the author of 3 Forex trading books. Sweet. Going to be a good show today. Well, we're going to start with a question for both of you. Would you, or just a simple little add-on, would you like to add anything to your introduction, Inna?
No, you said almost all about me, except I am more like a swing trader or short-term trader than intraday trader. So.
Oh, okay, perfect. And Raghee, anything that you'd like to add?
Yeah, the only reason I wrote the books is to make my mom happy.
Oh, yeah. Did your mom read them?
Not at all. Not at all. I like to joke and say my mom bought all the copies.
Okay, nice. Let's start also with how you both got involved in trading and what attracted to you. Raghee, take it away.
So I got started in trading really as an accident, and my mom is actually who got me in the markets. So in high school, our job was to get good grades, and I wanted to get a job. I wanted spending money, so she let me get a part-time job, and she then said 25% of what you make has to go into the markets. So of course, being a teenager, I was very upset about this and wanted to prove to her that my money was not actually growing, so I could stop giving her the 25%. So think about the psyche of a 14, 15-year-old. Lo and behold, it was making money, and I was hooked. At that point, I wanted to know what she was doing. And she was a bit of a market timer, and I wouldn't call her a trader, but it was enough in, say, 1987 for me to get very interested. So right around the age of 15 and a half, I actually, and I guess it's that the statute of limitations is probably gone at this point because I'm going to be 50 this year. And I actually used her name to open my very first commodity trading account. And I started trading at 15 and a half, practically flunked out of college because I wasn't going to class and I was trading. And I've just been doing it ever since. So it's just been one thing stacking onto another. And this has been the path that I've chosen for my career.
Nice. It's what they say. It's not timing the market, it's time in the market. And that's one of the old sayings.
Very true. And I think luckily now there's so many books where a new trader could go back and study, say, the long-term capital management implosion, which has been almost a playbook for, every other bubble that's come ever since. Even the Archegos recent bubble had shades of long-term capital management. So I love clearly reading. And what's great for new traders is they can read a lot of books on the history of the market. So time in the market, that's excellent. I love that.
Yeah. I love how the long-term capital people, those are the ones who came up with the Black-Scholes equation too. I remember learning that in university. I was like, God damn. Well, yeah. Inna, how about yourself? How did you get involved with trading?
Well, I had a sad story. It happened in 2008, and our family owned a lot of commercial real estate. And we tried, then crisis happened, and we tried to sell that real estate, but it was just dropping, the prices were dropping, and no one wanted to buy. And we had some loans, a lot of loans actually, and it just killed us till the end of crisis. So we lost all the money, all our investments in real estate. So then I decided that liquidity is number one when it comes to investing, when it comes to money. So I needed a business with a very high liquidity of my funds, where I could get back my funds if I needed them, for example, where I could just reinvest them in some other assets, for example, and so on, just to have full control over the funds. So it's not surprised that I came to trading, and first I started with Forex. And it ended bad again. So then I moved to stocks and futures, and I completely changed all the approach. I completely changed my view of the market and how I should trade.
And Inna, for many traders, managing one account is tough enough. How do you manage multiple accounts?
Well, in fact, most of the accounts are managed via broker software that gives an opportunity to allocate the trades and to build groups of investors, for example, depending on deposit or depending on their risk tolerance. So it makes more easy to manage a big number of accounts. And besides, I do research on all the markets to find interesting markets to trade. So I do that research anyway. And I pick up that ideas anyway and placing the trades. I mean, actual placing the trades, pressing buttons and so on doesn't take so much time, and especially with the nowadays with all the software and so on. So. And
I guess same thing for you, Raghee. How do you stay on top of all the different markets that are out there that you're watching and trading?
Sure. So if I'm looking at multiple markets, the easiest way that I have found to track it is making sure there's always a connective thread between them. So for example, this morning I was trading Dow, crude, and Canadian dollar. So I know that Dow and crude typically have a fairly sympathetic correlation with the energies. I know that Canadian dollar is going to track with crude. So I think that's one example. And all the correlations, of course, they do ebb and flow. Correlations aren't fixed, and they're certainly not 100%. But overall, if I can find markets where I can take advantage of high concentration weighting within an ETF, or if I can take advantage of high concentration weighting within the index, it becomes much easier to understand that if I'm trading Microsoft and Apple, I can look at the XLK ETF and look at how that's tracking with the NASDAQ. So I'm always looking for connective threads. That's going to be at, say, the index and sector level. And then alternatively, the other thing would be looking at macroeconomic trends. So if I can find, for example, right now, I love the long positions in XLE and crude oil and RBOB gas. So if I can take advantage of a reflation trade, I know there's a technical trend in those markets, and I know there's a macroeconomic trend in those markets. That's another easy way to sort of look at one idea and see the knock-on effect work for me. So it's the lazy way of looking at multiple asset classes. But I joke, it's not lazy. What it is the most effective way. But it also ends up being the easier way.
The lazy way in trading is just picking a pair and saying, let's buy and sell, because you got to have that, trigger finger going. So
Sure.
Sometimes it works better than technical analysis. It happens
50
also.
got 50-50. Let's do the roulette. And Raghee, you have an all market approach. Describe maybe a little bit what that is and why you think that's important.
So I think, in terms of the hierarchy of the markets, one of my first mentors, and I trade stocks, so I'm not bashing stocks, but I remember him telling me he was a commodities trader and Forex. And he said that stocks are the snail on the turtle's back. In other words, stocks are a very small market. I love trading stocks. I do it almost daily, but I think there's going to be a lot of benefit for every stock trader out there, ETF stocks and the related options, to look at what's happening at the foreign exchange and at the futures, commodity futures level, because central bank activity, if you believe in what Stan Druckenmiller says, you want to know the ultimate macro, look at what central banks are doing with monetary policy. That's really pretty much going to dictate what equities are doing. And we can see that right now in this market. So, as far as I'm concerned, if I can look at a top-down approach, but look at it top-down from foreign exchange, futures, and then look at equities, that type of cohesion keeps me from forgetting that central banks are going to dictate pretty much whatever macroeconomic environment we're in, which futures then to focus on, being long or short, and then which stocks are going to follow the path of what the Forex and futures did. So that's the way that I look at, the hierarchy, if you will, of that.
Nice. And I understand you trade various markets as well. What instruments are in there, and what would your favorite one be between instruments and asset classes?
Well, I trade different markets, and I always try to find a market that is ready for significant rally or decline. So I like to use a mix of fundamental and technical analysis, where I view fundamental analysis as the course for coming rally or decline. And technical analysis is just as a tool to find an actual entry point. And talking about my favorite market, well, I think it's agriculture sector, sugar, wheat, corn, because when those markets have a good setup, they usually play it very well. And they are more supply and demand driven, actually, less speculative, I must say. So, and I have something like 3 groups of markets. It's my division and my view of those groups based on the tools I am using as a tool to forecast the next price. So, for example, for commodities, I use commitment of trader report, cycle, intermarket forecast, premium, backwardation market, if any, and seasonal, because for commodities, seasonality matters because of harvest and so on. And for financial futures, and especially for currencies, I use cycles, I use interest rates forecast, I use Fed funds forecast as well as for equities. And for stock indexes, I like to use also insider accumulation, which is just an amazing tool, and advanced decline line. I know it sounds like an old school advanced decline line, but it still works, especially if you combine with other tools.
What is the advanced decline line?
Advanced decline line is an indicator that shows how much stocks in this stock index are actually falling or rising. So it helps you to find the divergence between S&P 500, for example, and the stocks in S&P 500, because sometimes we have situations when S&P 500 is hitting new highs, but advanced decline line, which means most of the stocks in this index are not following. So we have bearish divergence, and that is a sign this breakup is false breakup. And if insider accumulation, for example, is given the same signal, it's a great signal to look for shorts in this market, and the opposite is valid for longs.
Nice. And I know you also mentioned the COT reports, the commitment of traders reports. What exactly are those, and how do you look at those and break those down?
Well, I I have somewhat untraditional view on commitment of trader reports because I always look at extremes in commercials positions. Why commercials? Because they are real users and producers of commodity, and they know this market like no one else in the world. No hedge fund, no bank knows better wheat, for example, than the farmers do. That's 100%. And if their position reach some extreme levels, for example, the bigger short positions in recent year or better 3 years, this is the market to watch and to add to watch list. Nice. So if we just see they are adding more and more to shorts, but these shorts are far from extreme, this market is not interesting, and likely the move will be not so big, or maybe market will remain flat. So what I'm trying to do is to find fundamental setup for rally or decline, because these commercials, they know everything about this market. And if they are buying like a crazy this market, they know something, and we will get to know that information in 2 weeks maybe, or maybe even later, whatever it may be.
Yeah, like what's that movie, Trading Places? Let's buy some oranges. Raghee, I saw you nodding your head a little bit about the COT. Anything you'd like to add about the COT?
I love what she was saying about those extremes in psychology, because she's so right, and it's wonderful when we have these kind of get-togethers. We could talk to other traders. I'm taking notes, I'm listening, and those are things that remind me. Yeah, those extremes in opinion, whether that be price and historical lows, or as she was mentioning with the COT. Yeah, I completely agree. It just reminds me of things that. You were mentioning that old school, right? Old school stuff works. I love that you said that, because so many traders are looking for the new whiz bang, shiny, secret squiggle indicator, when in fact, my favorite books on the shelf behind me are ones that were written in the 20s, they were written in the 30s, and they talk about the old school psychology and price movement. And I'm not a huge fan of, a lot of the new tools, which are just completely price-based and not sentiment and informed. As she mentioned, the producers know everything. Of course, they're on the ground with it. So I love everything she said. That's why I was nodding profusely.
Yeah, I must agree. We are animals that are very nature and core, and a lot of our actions and decisions, they don't make sense. They're more based on fear, survival, and other reasons. So if anyone's trying to figure out why the markets don't make sense, you got to try and understand human nature as well. Raghee, can you walk us through a typical session in your trading rooms?
Sure. So it depends on what I'm doing. I try to compartmentalize the time frame. So in the morning, I like to focus on my intraday. So the bell rings, I'll focus on my day trading between 9:30 and 11:30. If we have, for example, the way we had the CPI and the initial claims this morning at 8:30 Eastern, I might start a little bit earlier to take advantage of what is probably going to be the larger price swing of the morning. So 2 to 3 hours at most. I don't think it's realistic to intraday trade all day long. I don't even think it's effective to intraday trade all day long. So I'm a retail trader. I work from this is my home office, and I'm sitting in front of my screens, and I try to find a way to remember that the decision-making muscle does fatigue. So I'll focus on the short term in the morning for 2 to 3 hours at most, at very, very most. And then I'll take a break throughout the midday doldrums. And then in the second half of the day, I'll focus on longer term time frames. So that's when I'll shift away from, say, a 1, 2, 5 minute look at the market to more of a daily or weekly time frame view, and I'll start to put on, we call them swings or call them trend following, whatever you'd like. I start to put on those longer term time frame, longer term time horizon trades. So I kind of divide my day up. I don't think it's realistic to try to do both at the same time. So, and then before you know it, it's time for dinner, and then just do it all over again the next day. But that's how I divide up my day, and then that's how I divide up my time in the chat rooms.
And are traders allowed to follow along with your setups, or what kind of questions do they ask?
Oh, of course. Look, timestamp is everything. I think that when we as analysts or traders are sharing our ideas, timestamp, timeliness is everything. So of course, that's part of the reason for folks to tune in. They want to see what I'm trading, get the setup, what levels from which I want to be long or short, where are my initial targets, where are the stop losses, things of that nature. So, of course, it's a little bit of a trade along, right? Watch what I'm doing. And if they feel the risk is within their comfort level, they can, of course, join along. So it's almost like color commentating your own sports event, right? I'm trying to walk them through what I'm seeing, and then I'm walking them through my play. And it actually, interestingly enough, as a side, is that it actually makes you a better trader, because now you're having to answer to, a few hundred, if not a couple thousand people that are asking questions and following along. It's amazing how much better and more process driven you become when you have to explain what you're doing to a group of, new to slightly experienced traders.
Yeah, definitely. Having them ask those questions can definitely help kind of sharpen the edges.
Mm-hmm.
And Inna, how should someone evaluate and choose a money manager?
Well, I think it's important to find a like-minded person, first of all, because if a money manager and investor have their way two different investment philosophies, risk tolerance, and so on, even money manager can be a very good trader, but still the investor will be very disappointed. So I think that investor always has to start with conversation with money manager and and to discuss all the details, just to see if they are on the same page. And this is number one.
And what would be some characteristics that you should look out for? Good ones, bad ones?
As I said, first of all, you need to be on the same page with money manager, because, for example, if money manager is more taking more aggressive approach and investor is too conservative, money manager can make in the result very good returns, but this investor will get headache, for example, 3 times a day, and it's absolutely not okay. So you have to find someone who shares the same view. And the next is, I think it's always better to go with managed accounts, because in that case, all the funds are always on your account and you can see all open trades and so on. Because in case of investment pools, it's the way different, and you just join the pool and you get monthly reports, and this is it. So you don't have actually any control over your finances. You just have to wait till the end of your agreement and then get your money back. But with many managed accounts, you have full control and you can always leave if you don't like something. So this is number 2. Look for separately managed accounts, not for investment pools.
Got it. It's always frustrating when you make money for a client and they're always calling you saying, how come you didn't make more money? Or they're saying, what did you do with this trade?
Well, I had absolutely different situations, and sometimes I meet people who want to make a lot of money, but when I ask them about their risk tolerance, they're saying me, what do you mean? Do you mean how much I'm going to lose? I don't want to lose. I thought you're making money and you're not losing money. But anyway, there has to be some kind of risk to build a strategy and to allocate trades and to understand what assets you have to trade for that account, for example. And sometimes people, when they hear you're actually doing not bad, they believe that you know some magic and you don't have any losing trades or something like that. And if you tell them it doesn't work like that, they are, okay, then I will find someone else. And you know what is interesting? They will find someone who will tell them a risk-free strategy and so on. They will give them money, lose all the money, and then in a year or so, they come back and tell their stories how they got scammed. So just be realistic, and there is no profit without a risk in this business, no matter what you want to hear, but it's a reality.
The classic pitfall. People only buy what they want to hear sometimes, and when you're honest and you give them the, when you're just honest with them and you tell them how it is, they're like, well, no, I heard it was different, and it's just.
Yeah, recently I had a talk with one of the new clients. He is actually something like a few months ago, started a managed account, and he was disappointed why I don't trade more often, because I could get more profits if I traded every day. But in fact, I said to him that if I traded more, likely you won't get any profits at all. So sometimes people understand how things are working, and they understand the ratio between risk and profits and so on. But sometimes I meet people who are just far from reality.
Well, that's because they haven't spent a day in your shoes, and with all due respect to them, they probably worked very hard and made their money doing something else, but they haven't had to spend a day in the markets and ride those waves. And the more you trade, according to history and all those results, is the higher chance you have, probabilities you have of losing. What are your thoughts on this, Raghee?
In terms of, I like what she. Go ahead. Yeah. I'm sorry.
So, in terms of just meeting clients' expectations and seeing if they got realistic ones, and how do you get them to the finish line?
Well, everything about having someone who has a similar approach to the market, exactly like she said. I mean, I'm just nodding my head thinking, I think when you've been in the markets for a while, certain truths just bubble up to the surface. And one of them is there may be a great trader out there. I know a trader who is a scalper, and it's nothing for him to put 150 trades on per day. That would put me in an early grave. He's a very successful trader, but I can't trade like that. It's not the way I'm wired. So I think looking for someone who makes money is just the first obvious question. And then it's how are you making money? And then what are you risking to make that money? What kind of capital requirement do you have to put that strategy to work? And so I think whether you're looking for a money manager or whether you're looking for a mentor, the questions are probably the same. So I think the most difficult thing is to first figure out what me as a trader or me as someone who wants to invest with somebody wants to make money doing. In other words, am I going to be more comfortable with a longer term time frame and longer term time horizon? So if I'm presenting a day trading strategy that's been working really well for me, but someone wants a buy and hold approach, right? So when you have those kinds of mismatches, or you don't know what it is you want, and you're just looking randomly for someone just to make you money with, as she said, zero risk and all reward, as if. And I think the problem is we find ourselves as a trading and investing culture celebrating the high concentration bet traders out there. We celebrate, and there's nothing wrong with these individuals, but they're celebrated in movies and books. So the Michael Burrys of the world, clearly he's brilliant, but people forget how much heat he had to take to hold that position and how much capital he needed in his time horizon, right? But all we hear is, whatever he made, whatever $2 billion, or whether it be Paulson's trade, or whether it be, all these people that are celebrated in financial media, as they should be, but we forget the kind of capital requirement that they had, the kind of patience that they had, and the fact that they were, putting on high concentration bets. What we don't hear is the roadside littered with all the people who may have made a bet on the mortgage crisis eventually, but couldn't hold on for as long as some of the winners did. And that's where I think we celebrate sometimes the wrong kind of thing. We don't celebrate sort of what I call the money ball, just get on base, very calm, just get hits, singles and doubles type approach. We're celebrating the grand slam. We're celebrating the home run. So, all that goes back to what are you willing to risk? And just as she said, are you finding people that are, in a risk and strategic way, a good match for you? So I love the fact that know thyself has to come first.
Yeah, I completely.
Sorry.
No, go for it, Inna.
And it always takes time to make money because market doesn't give good trades every day and even every week. So you have to be patient to wait for that opportunity to make money. And it doesn't happen very easily and very often. And also some people think it's like everyday profitable or something like that. But the reality is different. And about Michael, not much people are thinking actually how much stress he had to handle when he went almost bankruptcy. In fact, it's like few weeks and his fund would be dead, in fact. And it was very stressful, but people just ignore that moment, right?
Exactly.
Yeah, well, there's whenever I'm reading a book about finance from the history, that they always mention those titans who had this belief on a certain position and they went all in on it and they couldn't handle the downturn and they just got washed up. So those are the ones who aren't super famous. Maybe they should be celebrated and remembered too, so we don't make those same mistakes and help build some realistic expectations for people as well. We've got a question coming in here. Mike2Gmail asks, and let me know if we need to clarify this question or not. Is advance and decline close to the ADX positive or negative? I don't know. Does that make sense?
Once again, please.
Is it advance and decline close to the ADX positive or negative? So he's trying to figure out how to read the indicator maybe.
Well, I don't use ADX, so I can't comment on that.
Yeah, okay. Maybe he can clarify his question and we can get back to it. Someone else is asking, what do you think about the S&PX? But I don't think we should be going into giving advice on certain things over here. If you want, you can reach out to Inna or Raghee individually, and they can maybe help you out with that question. Inna, what is an NFA Series 3 license for all these people out here who are kind of curious about how do you get into managing funds?
It's an American license that allows you to manage people's funds above 25 millions under management, because if you have less than 25 millions and less than 15 clients, you don't have to register with NFA. So, it also allows you to work with institutional clients, like, for example, to take part of portfolio from other hedge fund or other investment company under management and so on.
And what was the process for getting that?
It's more like another level of clients and another level of sums under management and deposit sizes.
Okay. Now, I guess Mike was just clarifying, is advance and decline close similar to the ADX, or is it positive or negative? But you said you don't deal with the ADX.
I don't use ADX, so I can't comment.
Sorry, Mike. But if you got any other questions, let us know. We'll fire those away and hopefully we can get you some answers. Raghee, how do you pick your trades?
It depends if it's a short term. So how I pick my trades, if you're looking at a short-term trade, clearly I'm going to start with a short-term time frame and make sure that I'm trading at the right time and have a finite list. So if I'm day trading, it'll be Canadian dollar, yen, maybe euro, indices, S&P, NASDAQ, Dow, and crude, gold, maybe bonds. So it's a pretty tight list. And I don't think it's realistic to scan thousands of names that you don't have familiarity with day in and day out. If I'm going to include stocks, as I mentioned before, they should be stocks that are heavily weighted within the indices of the sectors that I'm already watching. So I have more of a tide and boats relationship. That's intraday. End of day, it's a lot of what Inna talked about, finding extremes in psychology, finding extremes in different measurements. And in those extremes come the imbalances, and in the imbalances come the trends. So at the end of the day, what I'm looking for is purely a trend. And there's very few traders and investors out there who won't benefit from just a straight, simple uptrend. It could be a macroeconomic driven uptrend. It could be a technically driven uptrend. But when traders and investors say refer back to 2020 and how great it was, that was an anomaly of a year. 2021 is probably more realistic to what someone who's been trading for decades is probably accustomed to seeing. So find the trends, find the corners of the market that have clear trends, whether they're, you're coming across them macroeconomically, as Inna mentioned, using COT or whatever it is, right? And then follow that trend. I think that it's, again, going back to books that I remember reading that were, Schabacher, Wyckoff, Dow. I think the trend is really where most of a longer term, say daily or weekly investor or trader success is going to be found. So I spend most of my time building a watch list. I'm not interested in 97 different strategies and 42 different indicators. Watch list building is number one. Have a good watch list. You're going to have better trades. And I think most traders do the opposite. They're spending all this time on secret squiggle indicators and strategy, and their watch list is almost a a throwaway. What's the meme stock of the day, or what's the headline on financial media? And then they scratch their head wondering why they're not succeeding. Build a watch list first, spend most of your time there. And then the strategy actually really reveals itself for the most part.
Yeah, I like what you said about a watch list, because that gives you multiple things to look at. But you don't have to chase every single car. And when your watch list kind of hits certain parameters that you set, then you can say, okay, now this is the right trade. So that way you're not always trying to chase another trade. You got your trades coming to you in a way. And
Sure.
That definitely seems a lot healthier than running after everything. Tell us about your indicator matrix, including your acclaimed grab candles indicator.
Oh, they're acclaimed, huh? So
Yeah.
basically, when I was young, I had a complete fascination with Charles Dow, because he talked about market behavior in a psychological way. So having been a double major of English and psychology coming out of college, I loved the non-finance, the non-economic take on the markets. I loved looking at the markets from, as you mentioned earlier, the markets are a psychological game. So he talked about that, and he talked about the four trends, and obviously Wyckoff went from there. But I got fascinated with Dow. So then I started thinking, I can't find an indicator to discern between markup, markdown, accumulation, distribution. Everything we do as traders, for me, starts with what is the underlying market behavior, and he categorized them into those four. It doesn't matter if you're looking at a 1-minute chart or a monthly chart. At some point, I've got to start with, is this in a trend? Is it choppy? Is it in a narrow range, or is it, moving down, whatever that may be? Once I identify that, the strategy and the indicators that I'm going to use must reflect that behavior. So grab candles, which is just a simple acronym for green, red, and blue, came from my using some moving averages, color coding the candles just to give me a visual of behavior, bullish behavior being green, bearish behavior being red, and the neutral being blue. They're ridiculously simple. It's really using a 34-period exponential moving average and where price is around them to color code the candles. And that's how I basically decoded Dow, and that's why I created the grab candles. They're not an automatic system. They're not any kind of buy here, sell here approach. It's really to make sure you can understand the environment that you're trading.
Well, you mentioned a couple books. What would be some of your favorite books to read for any of the traders out there, so that way they can, get some knowledge, aside from your book as well, obviously?
I never recommend my book. I think I seldom recommend strategy books, including my own, and I have a number of friends who've written them as well. The only books that really matter to me are the ones that talk about, again, back to psychology. But from a trader's point of view, I'm not necessarily talking about psychology in terms of the trading psychology. I'm talking about books legendary books to me, like What I Learned Losing $1 Million. And that was written by a trader who was trading soybeans and thought he was on the other side of a trade from a very well-known trader, and all the psychological traps he went through in the process of losing money. We don't learn anything from our wins. Clearly the brain is not going to stop and ponder a great win. But when we lose, sadly, and I think a lot of traders find this out, is trauma teaches. So take advantage of the trauma. A loss is a trauma. Find out what you did, what you overlooked, where ego got involved. So I like those kinds of books. I love history books about the markets. When Genius Failed is probably one of my favorites. It's very short. It lays out the whole implosion and the arrogance around the long-term capital management implosion. And you can see pieces of that story happen in the tech bubble bursting. And you can see it in 2008. You can see it most recently in Archegos. And it's going to happen again and again and again. So history books on the market, I think, are really, really good. Strategy you're going to find from a good mentor. As Inna was mentioning, find someone who's wired like you are. And I think strategy is going to be found by looking at price action and just absorbing what it means to you, and hopefully having a mentor that can help you decode it along the way. So that's really what I recommend. But if you want a technical analysis book, pick something up by Schaubach, or pick something up by Wyckoff, or find the writings about Dow and Dow theory, and keep it old school. Even Darvis, I love keeping it old school.
Sweet. I took some notes. I'm going to get What I Learned Losing $1 Million for sure. I'm reading right now, what is it? Panics, Bubbles, and Mania, something like that. So lots of history inside of there. So and you see everything kind of taking place in different aspects, like you said. And yeah, we'll see. There's lots of money going around, so everything seems a little bit inflated, and you're just like, everything feels like a mania or a bubble right now. Especially with $5 stocks from courtesy of Robinhood, right? So you can buy pieces of stocks. Everyone's getting in on that. How about yourself, Inna? Any books that you've enjoyed along the way?
Well, I fully agree with Raghee regarding old school books because I'm not a big fan of new theories. I like proven time-tested strategies, proven time-tested approaches, because, if something worked well for a few months or even a year, it's not a result, and it's just something new that will fade away very quickly, because I am in trading 12 years and I have saw a lot of such new approaches and new strategies. They failed completely in a year or even less. So old school is a real deal.
Yeah. Like you said, those small little blips, those are more phenomena than they are tried, tested, and true. So I completely agree with that. What's the difference between a hedge fund and a managed account, and what's involved with launching a hedge fund?
Well, actually, the main difference is hedge funds are serving high net worth individuals. So the minimum required is very high. And in the US, you have to be an accredited investor to invest in a hedge fund. If you are a retail investor, you can't invest in a hedge fund even if you have 5 million, even if you have that minimum. You have to go to financial authorities and to become accredited investor. Then you can join a hedge fund. So managed accounts is a bit different because you can start managed accounts with 50K, for example. So it's more like for retailers. And there are differences in strategies because, as it comes from the name hedge fund, their strategies are so-called hedged strategy, which means they're trying to find the strongest stocks to go long and the weakest to go short. While if you are just a CTA, for example, or other kind of CPO, for example, or other kinds of managed accounts providers, you are more free in picking up different kinds of strategies, right? So it's more freedom, but at the same time, the investors are different. Because accredited investor is more easy to work with. He knows everything about risk reward, so he's investing in hedge funds, venture funds, and so on many years, so he understands all the stuffs. So it's not like a retailer who comes and wants to see some significant gain. So it's a more, more realistic investor, or investor that has more realistic expectations. And to start, you certainly need at least one investor. You can't start without investors.
Well, so everybody always wants to make the moon. We started working with the Sovereign Wealth Fund, and they're like, yeah, we'd be happy with 10% a month. I was like, well, but they also understand the risk that comes with it. So let's see how that goes. So yeah. I prefer to go slow and steady. But, I don't want to give anyone any surprises. In terms of, let's just go a little off topic over here. We're on TradingView. We're presenting over here. What would be some tips with regards to setting up your charts? What are some indicators you like using? Things like that. Start with you, Raghee.
I'm a huge TradingView fan. I've been using TradingView. Actually, I have it up on my screen right now. I've been using TradingView because a lot of the Forex brokers that I was with started moving their charts over to TradingView. I thought, what is this? And then when I was trading crypto, that was the main way that I would track crypto. So I've just now started to incorporate it more and more. The Pine editor is actually very easy to work with. I've got a number of tools that I've scripted in Pine editor or have people scripting Pine editor. So I'm a huge fan. And then if I want to trade, now with the back end where I can link it to my Onda account or TradeStation or even Alpaca, I love it. So actually within TradingView, I have the grab candles, those color-coded candles. They're available free within the platform. And if people click on the indicators, button on the top of the TradingView platform and just type in GRAB candles. You'll probably get 3 or 4 versions of them because I've always made the calculation, the formula for them freely available. So that's on there. The 34 EMAs that I use, those will usually come with the grab candle indicator. Another tool that I really like using on TradingView is the volume profile along the side. I'm not interested in volume on a particular date unless it's well below the average. I love the vertical volume. So if no one's ever tried the volume profile, they've got the built-in volume profile. Big fan of that. The variable range volume profile, I love putting that on my TradingView charts. And Darvis, I put Darvis levels. We've got a free version of Darvis. If you search simpler in the TradingView platform, you'll see all the free tools. There's 3 of them that don't have the lock next to them. I would use Darvis, love the volume profile, and throw the grab candles on there. And even members who are using TradingView free, it should keep you under that 3 indicator threshold. But huge fan. I've been a pro, whatever that pro echelon level is, for many, many years. I could write poetry to TradingView.
Well, what's your handle in case anybody wants to reach out over TradingView? It's
Raghee Horner. I'm Raghee Horner on everything. If it's not Raghee Horner, it's some scammer pretending to be me, sadly. But yeah, it's just Raghee Horner.
Sweet. And when someone looks at the volume, indicators, how would they read those, and what would they kind of take out of those?
Sure. So, my approach is a 4-factor approach. I mean, most people look at price and they end there. So what do I mean by that? Open, high, low, close. But then think about the indicators that we're using. They're typically based on some calculation of open, high, low, close. So we end up looking at price and then price-based indicators, when in fact we should look at time, we should look at volume, and we should look at volatility. So the volatility factor is a little more difficult to discern, but the volume is very easy. So what you want to do if you're going to use, say, a combination of price and volume is use whatever price tools you like, but make sure you're implementing a volume weighted average price and or something like those volume profile levels that are built in to the platform, and look at where the size is. I mean, that's really it. Look at where the size is. It's just that simple. I look at it as that sub-market. So I'm sure many of you out there have seen pictures of the like an iceberg or a glacier, and they show what is shown above the surface of the water and then the mass that's underneath the water. To me, that's volume. So you see a little bit at price, and it's good to know the iceberg is there, but when you look underwater, sort of sub the surface, you see a lot more. So look at where those volume levels are clumped up, and you're going to notice just how much those levels are defended and reacted to. And oftentimes they're not going to be obvious price levels at all. So when you overlay the two, I think you immediately start to see things that the broader markets are completely oblivious to.
Nice input. And Inna, how would you like to set up your charts? Anything special that you set them up with when you look at them?
Well, as I said, I use advanced decline line, insider accumulation, cycles. I use premium indicator and seasonal indicator. But I also use, it's not actually an indicator, but a free information where you can find online. It's unemployment data, for example, and other key economic data, but not in terms of today's news. It's like I'm using a line chart to see the dynamic of unemployment, for example. Is it positive or negative? Because it helps to understand you if current long-term trend is still sustainable or not. So it's very important to understand the dynamic of key economic indicators, not just to react on today's news. It's more like very, very short term and intraday reaction. But the long picture may be the way different. And you can find this information absolutely for free online, so you don't have to pay for indicators. Because, for example, insider accumulation and others and cycles, they are, in most cases, they are paid indicators. And the commitment of trader report is also available for free, so you don't have to pay for any indicators. You can just get that information for free and use it.
Nice. We got a few minutes left. I'd like to allow each of you, I want to let each of you tell a little bit more about your products, your services, how people can find you. Raghee, please let us know about your trading rooms, your products, your services, how people can find you and start working with you.
Sure. So again, kind of going back to what Inna said, make sure that what I do is something that meshes with the way that you want to be, interacting with the market. So I always recommend, I have a YouTube channel like everybody. Again, all my social media handles are Raghee Horner. So I've got my YouTube channel at Raghee Horner. I'm on Instagram. I'm on Twitter. Raghee Horner at TradingView as well. If you just Google me, you'll find most of my tools. I have a blog over at countdowntrader.com, perfectly free. And every single update, that blog really is a resource for everything that I do. So if I were to have woken up one day with amnesia, I could read my own blog, read some of the processes. I share my processes with a lot of transparency. So you can check out countdowntrader.com. And my chat room is over at simplertrading.com. But check out the free resources and find out if it's the way that I look at the market, the tools that I use that are available free on TradingView are they resonate with you. Do they speak to you? Do they give you information that makes you feel confident to say, yeah, I think I could use this and learn more. But yeah, it's definitely there. The internet is a wonderful, wonderful thing.
And yourself, Inna?
Well, you can visit my website, managedaccountsir.com, and I also have a blog. I post very actively on this blog, so I share free research there and some educational articles, so it can be useful for traders, but mostly for the swing traders and long-term investors. So I'm not much of a day trader. And at the moment, I offer managed accounts, market research, and I have a trading course that is available till my hedge fund will be opened. Because after that, I will have to turn it off and research as well, because it will be considered as a conflict of interest, for example, so it won't be available anymore. But for now, it's available.
Excellent. Thank you. And there was Mike was asking a question about inflation. Well, now you know how to get in touch with Raghee and Inna individually. You can check out their free resources, get in touch with them, find out about Inna's research and see if some of that kind of helps answer your questions. So I apologize we didn't address it. I just don't want to go into maybe getting into the trading advice section over here. I want to be talking more about trading knowledge and all those, and I'm sure Raghee and Inna would need to put up some disclosures for answering those questions, so not going to put them in that spot. But I just wanted to thank both of you, Inna and Raghee, for coming on, sharing your knowledge, giving me some really good books to read now. I'm excited to go get some books. My bookshelf is growing. It's not quite there yet, but maybe I got like one line of the shelf up there. We're going. And but I definitely have found the passion and love of reading and the search for knowledge. So for all the traders out there, there's definitely no quick answer, no quick solution. You got to spend the time. You got to learn. You got to learn from yourself. You got to, like Raghee said, learn from your failures. Those are the best ways to learn. As long as you can pick yourself up and get back up from those failures, keep on going, keep learning, and try not to risk your whole account on any one bet. It's all about staying alive for another day, and soon enough you will find that trend and you will ride that trend. So just be patient. And once again, thank you, Inna and Raghee, for another great episode and lots of knowledge shared. All right, thank you, and see you everyone soon. All right, take care.
Thank you. Bye.
Bye-bye.